Hey everybody, Gary with Basecamp Trading. Welcome to Intro to Trading. What is your risk-reward ratio? What is a risk-reward ratio? A risk-reward ratio is a ratio of the amount of ticks you're willing to risk versus the number of ticks you expect to make on your trade. So for example, if we're going to have a 2-to-1 risk-reward ratio and we're risking 10 ticks, then our expectation is to make 20 ticks. We have a 2-to-1 risk-reward ratio. And there's several different ways that we can determine what our risk-reward ratio should be. We typically want to, as many times as possible, have at least a 2-to-1 risk-reward. Because if you have a 2-to-1 risk-reward ratio, you only have to be right a little more than a third of the time to still make money. If your risk-reward ratio is inverted, in other words, if you're risking 20 ticks to make 10 ticks, then your percentage of wins has to be significantly higher. So we definitely want to make sure that we have a proper risk-reward ratio. One of the ways that we can determine that is, let's take a look, for example, at this crude chart. And let's say I'm going to trade this trend reversal breakout right here. And all a trend reversal breakout is, you can see that we were in a downtrend, making lower highs, lower lows. We came here, put in a lower low, put in a pivot. It's not a higher pivot high. Our previous pivot high was back here, but it's a pivot. Then we have a higher pivot low, and then we're going to break out to a higher pivot high. And on this particular chart, our breakout is going to occur on the other side of a resistance zone. We don't want to take a trade into resistance. 33.75 is resistance. We don't want to take a trade into resistance. So this is going to be a breakout above a resistance zone, and we know we have a potential target zone up here at 34.22. So on a typical trend reversal breakout trade, we're going to risk anywhere between 10 and 12 ticks. So if that's going to be the case, then we know that we need to try to make at least 20 to 24 ticks. Well, our trend reversal breakout is going to happen at 33.78 because the top of that bar, our trend reversal breakout is actually going to be at 33.77. Top of that bar is 33.76. Trend reversal breakout is going to be one tick above that bar. So our entry is going to be 33.77. We have a target up there at 34.22. That's 45 ticks. So we know that that is definitely within our risk-reward ratio. We're needing to make at least 20 to 24 ticks. And in this particular case, you can see we went right up to our target zone. If you had your sell order sitting up there, you could have potentially made 45 ticks. So that is actually a little more than a 3-to-1 risk-reward ratio. And that's fine. The more ticks we can make per trade, the better our chances for making profits and increasing our account size. So again, we want to make sure that our number of ticks that we're risking is in proportionate to the number of ticks we're trying to make. Now, the other thing that we use to help determine that are our higher time frame charts. If our 240-minute chart and our 30-minute chart are both bearish, and we're going to take a bearish trade off of our 2-minute or our Renko chart, well, we know that the probabilities of hitting 30 and 40 ticks on those setups is really good. So we know we have a good risk-reward ratio on those kinds of market conditions. But let's say, for example, that our 30-minute chart is bullish and our 240-minute chart is bearish. Well, we know that under those market conditions, one, we probably don't want to trade. But if we are, we know that the number of ticks we're going to try to make on our setups is going to be less. So in that particular case, we may go with just a 1-to-1 risk reward. So if we're going to risk 10 ticks, we want to make 10 ticks. And so we may go ahead and take our profits quickly because we know that our expectations are that we're not going to get a big move. What we don't want to do is risk 10 ticks and only make 5 ticks. That's a bad risk-reward ratio. In the long run, your account will blow up if that's your risk-reward ratio, unless you have just a super, super accurate trading style. Because if you're risking 2 to make 1, you're going to have to be profitable almost all the time. So anyhow, it's definitely important to make sure that you have a good risk-reward ratio. And again, all our risk-reward ratio is the number of ticks or dollars that you're willing to risk versus the number of ticks or dollars that you intend to make. So again, make sure you have a proper risk-reward ratio. Make sure you have a way of determining that.